on Wall Street, top investors watching your money. Joining me right now is Bull Tick Capital Markets Chief Strategist Kathryn Rooney Vera. Yeah, Goldman is cutting its forecast for GDP for next year. They've gone now to 3.8%. Kathryn, as you know, they're citing the Omicron variant. You say it's time to put your money in hard assets like gold, real estate, even art. Kathryn, walk us through this because are you expecting a sell-off in stocks and you're looking for places to hide in real assets?
Yeah, it's important to maintain a portion of your portfolio that does well in a stagflationary scenario, which I think is not the base case, but certainly something that one needs to consider for the next 12 to 18 months, maybe a little bit further. The point here is that inflation is not entirely temporary in nature. We have a fiscal impulse and a wage price spiral impulse that are pushing the demand side. So it's not just the supply constraints emanating from bottlenecks in the supply chain, Maria. And we think the Fed is really treading a dangerous line with regard to keeping rates so low for such an extended period of time. Now this Omicron, the issue with the, Omicron is it could push interest rates hikes even further down the line. And that we think is a real threat to what at this point is very, very, I would say even euphoric levels in the market. So inflation is our biggest risk going into next year. Goldman Sachs did decrease from 4.2 to 3.8, still a pretty strong pace of economic expansion. I see it even less, 3 to 3.5%. And that's because consumption is likely to already have seen its biggest boost coming off of the reopening trade, and exacerbated by the effect that higher inflation rates do have on purchasing power of the average consumer.
Kathryn, real quick, if we were to see a sell-off in stocks, does that not mean we'll see a sell-off in valuations in real estate? I mean, can real estate stay strong while the stock market goes down?
Well, with the real hard asset, gold and even Bitcoin, as Mike was talking, is really an inflation hedge.
That would be better.
Yeah, it's an inflation hedge. So I do think that inflation is persistent in nature and accelerating. It's going to get uglier before it gets better. And my contention is the Fed is behind the curve. So really we're protecting ourselves more against inflation than a massive sell-off in stocks.
Great conversation, everybody. Thank you. Kathryn Rooney Vera.